So at this time, I would like to introduce Tony Salazar. Tony is the Commissioner of the Maryland Department of Financial Regulation, and he's also the current chair of the Conference of State Bank Supervisors. Background, Commissioner Salazar is an attorney with a distinguished 39-year career in the banking and financial services sector. He is currently serving his 8th year as Maryland's Commissioner of Financial Regulation. He is an active member of CSBS. Obviously, he serves as the chair of the board of directors today, and he is a member of the Non-Depository Supervisory Committee. In addition to his regulatory duties, Commissioner Salazar is a member of the Maryland Commission on Financial Education and Capability. We've had the privilege of working with Commissioner Salazar for many, many years, and I am delighted to welcome him to this year's conference and to welcome you on behalf of the Conference of State Bank Supervisors. Please join me in welcoming Tony Salazar.
All right. Thank you, Jim. Good morning, everyone. I want to welcome you on behalf of the CSBS, at least, and our other sponsors to the 13th Annual Community Banking Research Conference. As chair of the CSBS Board of Directors, I also want to thank our co-sponsors, the Federal Reserve System and the Federal Deposit Insurance Corporation, the FDIC. And I want to thank our host, of course, the Federal Reserve Bank here in St. Louis. They always do a wonderful job, and this is a great location. So this conference is a wonderful partnership. You heard Governor Bowman talk about that, and we look forward to a couple of great days here. We often hear about how the work presented here helps policymakers understand the empirical value of community banks. But I believe it also plays another important role. This conference and the research that it fosters helps hold us as financial supervisors accountable by showing us the impact of supervisory activity and the areas that need attention, and also by demonstrating potential approaches to addressing the challenges that are facing the community banking system. So in addition to serving, as you heard, as chair of the CSBS, I'm the Commissioner of Financial Regulation for the state of Maryland. My agency charters and supervises 19 community banks, and we license and oversee a large number of non-depository institutions. Like my counterparts in every state in the country, our job is to ensure consumer protection, maintain the safety and soundness of the financial system, and encourage economic growth in the state. In other words, our role involves building trust with both our state consumers and with the institutions that we supervise. State regulators meet with community bankers that we supervise on a regular basis, and we know their relationship banking model and the businesses they serve. We recognize that community banks are locally owned and operated. They want their communities to thrive just as we want them to thrive, because we all want strong, growing economies, and that all requires a tremendous amount of trust. We face a complex landscape of challenges today, including rapid technological advances. We face limited resources, the bank merger movement, and fluctuating federal policies. My office, despite having significant authority to protect consumers and ensuring a stable financial system, operates with a relatively small team of fewer than 100 and a budget of approximately $20 million. That means that we, like many other state regulators, must be strategic and accountable in how we use our resources. State regulators must make tough decisions on how they deploy their limited resources to be effective, and we need to ensure that our institutions and the broader system operate with integrity. However, we're not passive with those constraints. We continue to lead in areas such as non-depository licensing and supervision through state collaborations, and we're developing technology for more efficient and interconnected oversight. And we're strengthening our enforcement and coordination across state lines. Despite these challenges, state regulators like the OFR remain dedicated to consumer protection and maintaining a trustworthy financial system. But let me highlight, just to emphasize the importance of trust, the technology area. The current pace of technological change is unprecedented, and it presents both opportunities and risks. Digital assets, biometrics, facial recognition, they all offer the potential for broader access to financial products and system improvements, yet they also introduce significant risks, including fraud, profiling, and potential government overreach. Trust in our financial systems and the community banking system is paramount, and as a regulator, I'm acutely aware of my responsibility to foster this trust in every decision I make. As supervisors, we must not only understand these technologies, but also their potential implications so that we can effectively supervise, advise, and support our community banks, and to appropriately influence public policy. Trust and financial supervision is always important, and state regulators recognize that we are committed to filling gaps and ensuring that financial institutions always receive the oversight they need to ensure their safety and soundness. So, how do you establish trust in financial supervision? I often think of the quote that trust is built like a tower. It's like a tower of stones, one stone at a time, and that gives a good visual of how we approach accountability in the state regulatory system. We work incrementally, just like this conference, through our work and our outreach. States are known to be laboratories of innovation, and part of their composition is embracing new technologies. For example, Arkansas has its Innovation Lab, New York has the Innovative Bit License, and in Maryland we have an Innovation Committee in our office and a designated Innovation Contact. Earlier this year, my office surveyed our community banks and their use of artificial intelligence, which of course is becoming more pervasive in our personal and business lives. We found that the community banks in Maryland are growing comfortable using AI for fraud prevention, customer service, and improving their decision-making processes. Through the survey, we recognized the opportunities where we as regulators can provide guidance, resources, and regulatory clarity to help foster responsible and effective AI adoption in the financial services sector. But innovation also means looking to new ways to support our state residents as well, like fostering an accessible financial ecosystem. A couple of years ago, my governor signed the groundbreaking Access to Banking Act to provide incentives to state-chartered financial institutions to provide low-income communities with ongoing access to the financial system. The legislation also created a Community Investment Venture Fund, which we launched in June. And that fund is working to pair financial innovators with our state-chartered institutions. And the fund has received enormous interest from both fintech companies and our state-chartered banks. And I look forward to and have high hopes for this initiative. Now, another way we supervisors build trust is through collaboration. State supervisors collaborate with each other regularly, and we also work with our federal counterparts closely. Though there are sometimes differences in our approaches and our directions, we do always find ways to work together to improve supervision and maintain that important trust in the system. Because at the end of the day, we all agree as to our goals, protecting consumers and ensuring that our financial system retains its status as the best in the world. This conference, co-sponsored by CSBS, the Federal Reserve, and the FDIC, reflects that relationship. State supervisors are also represented on the FFIEC, State Liaison Committee, and the FSOC. That representation, I believe, improves trust between the agencies and gives greater confidence to the public that decisions are made with representative input. So ultimately, public policy built on sound data and research builds trust, and that underscores the importance of this conference. Bankers, you've shared your pain points and your successes over the years, and I've seen how that inspires the researchers to come back every year with data that can help the policymakers and academics. And the academics, your research is building a repository of information that strengthens our financial services ecosystem. And finally, we as regulators are learning from conferences like this how we can better support the institutions we supervise and the consumers we protect. And that, I believe, is how trust is built, right? One stone at a time, building on each other. As we move forward at this conference and in the future, let's embrace the opportunities ahead and commit to fostering innovation and collaboration, and to collectively navigating the challenges we face so that we can ensure community banking remains a trusted cornerstone of our financial system for generations to come. Thank you.